longer presentation today that's about what's going to happen to your life after these people get a hold of it. These people, that's why this list is here. These people. Now, quickly, because I don't want to run out of time, tell me who these people are, except the big face. Who can tell me who they are?
Geithner.
Who said Pelosi?
Geithner.
Who? Geithner, all right. Come on. Reed. Who said Reed?
Boehner.
Margaret said Palin, but
they're all 33rd degree Masons. So
who said Palin?
I did.
No.
Who else? Nobody got Larry Summers?
Oh yeah, he's right in the middle
Larry
there.
Summers right below Obama. How about below Larry Summers, Max Baucus?
They all look constipated.
How about to the left of Baucus, Charles Grassley? He's the real nasty one you got to watch out for, because he runs the tax. How about to the left of Obama, Mitchell, right below Sarah, Mitch O'Connell?
Oh, Mitchell.
Oh.
All right. To the right of Obama, John Boehner, that bonehead who said, "Oh yeah, I'll vote for increasing taxes on the wealthy," right? Before I won't. A lot like Himes. Anyway, I just saw this and I thought it'd be. I mean, these are scary people, and I would say vote them all out is what I would say, but without getting political. Both sides. I so enjoy B&I, and this is I keep a log. I think this is like my 55th week, according to my log. So, got my 1-year anniversary under my belt, and you know, there's a reason why. Why do I say I'm Fairfield's own homegrown CPA? Because it has been my home since 1955, and I've loved being an entrepreneur almost, I think, from the day that we came to Fairfield. Why do I say that? Just a little background. I think I might have said this before, but we forget after 3 months. You know, I started shining shoes on Black Rock Turnpike when I was in 5th grade. I started caddying in 8th grade to pay for high school. And I worked for Investors Mortgage during college in real estate, doing appraisals for Bob Wynn. All these things are sort of independent entrepreneurial things, even though you may be working for somebody or not. So, you know, I don't think I was ever far from that entrepreneurial bug. And then went on to 2 local CPA firms before I joined Price Waterhouse in 1978, and was there for 6 years. And then in 1984, a long time ago now it seems, I started my own firm. And so we've always been here, but in the meantime, you know, it's important to branch out to get a flavor outside and not be so parochial, I think. And so, you know, I was involved in Washington a lot. I got a code section named after me, doing my work for the ICPA in small business. Did a lot of things for small business, especially in the independent contractor area. And sort of one of the highlights was I had a Supreme Court case, for those of you who haven't seen the website, a couple of years ago, and that was quite fascinating too. So that'll make sure my name's permanently in the history books, the tax ones anyway, because of the Supreme Court case. We lost, but it's still going to be in the history books, whether you win or lose, you're in the history books. So that's a little background, and like I said, love the town of Fairfield, love being with B&I, but let's talk about what's going to happen, unfortunately, January 1st, unless something major happens on November 2nd. I'll give you the bad news first, because there is some good news, believe it or not, that has come out of the plethora of legislation that we can't even keep track of. I mean, it's getting so mind-boggling that it's hard as a professional to keep up. The first thing that's going to happen is, as you know, Obama's going to change the tax rates to 39.6% from 33%. I mean, that's a major change. Marginal tax rates are important. Not that it applies to everybody, but it's still just it puts a downer, I think, on what people anticipate, and that's why possibly you see a little bit about the recession and why we can't get out of it. But what does it mean? It means if you know you're going to be a tax rate, defer your expenses till next year. and accelerate income into this year. Not a lot of us have that flexibility, but that's the basic premise. Your deductions are worth more in a higher tax bracket. The stealth taxes, this is something that few Americans know, but it affects every one of you. And that's these personal exemption and itemized deduction phase-outs. You know, Congress doesn't like to raise your income taxes, so what do? They limit your deductions. So you have an exemption for yourself, whatever it is now, $3,700 per person, your kids, and blah, blah, blah. If you get above a certain income level, they take those exemptions away from you. You don't know it because nobody looks at every line of their tax return. But it's a stealth tax increase. Same way the itemized deductions. They limit your itemized deductions. We all have itemized deductions. When the government starts limiting them, it's another stealth tax. And, I mean, if not for nothing, I got the names of these people. I wish you would email them. I mean, you can email these people, you can fax them. I mean, I do it all the time. Not that you get any response, to show you how non-responsive your government is, by the way. You know, I'll never forget Governor Rell saying, "We like activists." So I used to fax her, never got a response. You know? Capital gains, this is not a good thing. For a country that believes in investment and a payoff, is that the capital gain rate is going to go from 15% on long-term rates to 20%. Now that's a 33% increase. 33% increase in cap gains. So again, if we have any gains, you know, take them this year. Dividends. This is a killer. I can't even calculate this. You may or may not know, but if you have dividends, and people who are investing now are looking for dividend yielding stocks, they can tell you all about that, because what are you getting? 0.1% to 1% on your interest rate in your bank accounts? And a lot of people are keeping money in their bank account because they're so fearful of the market. I mean, it's amazing the amount of cash that's sitting on not only corporate balance sheets, but personal balance sheets. I just read an article about Lacey, said, "I'm not going to put anything." I said, "I have access to it. I don't have to tie it up. A 2-year CD for 2%. Who's going to do that?" So, to me, that's the dumbest thing in the world. You just keep your money free. But dividend-paying stocks, if you can find the right things. But the rate's going to go to the top rate of 39.6%. That's a factor of, what, 2.5, 3 times the current rate? What, you know, our seniors, think about our seniors who can't get the interest on their savings account. They're looking for yield, and now they're going to start paying marginal rates. I mean, they may not be at 39.6%, but they're going to be higher than 15. So your parents, you know, people who live on fixed income, I don't know where they're coming from. The alternative minimum tax. Who knows about it or cares about it? Oh, but it's there, and the good thing is it kept a lot of people out. They raised the exemption amount from $45,000 for joint filing to $71,000, I believe. Now they're going to lower it back to $45,000. Last year, 5 million people were in the AMT. This year, if they do this, 32 million people. That means all of you are going to be in AMT. All of you are going to be in AMT. Why? Because you live in Fairfield County. You have mortgages, interest, state taxes. You're all going to be in AMT. What does that mean? You have no idea what your tax is. If you pay estimated taxes, you're going to be underestimated. It's just a nightmare, and it's happening automatically, and you won't even know it. Alternative minimum tax. Charitable contributions, right? We want to help our charities, right? What are they doing? Again, don't we hate the upper income people? And don't we hate all businesses in America? They're going to limit the charitable contributions, even if you're in a 39% bracket, to 28%. Why? Another stealth tax to discourage the high income people. Okay, enough of the bad news. A couple of good news things, believe it or not. Something to keep in mind, if you've had a bad year in 08 or 09, and it's called a business carryover, you could actually carry it back 5 years. So if somebody has that situation, or you know somebody does, they can go back to 2004 and possibly get refunds back. So it's a real nice feature. We just did it for a client, and you know, he loved it. He didn't know about it. We accelerated some of the deductions. We picked up a big net operating loss and got him $150,000 back in 2004.
Interest on that, Mike?
Pardon me?
They pay interest on that?
They do, yeah. Up after a certain point, after like 12 months, or 24 months. They used to do it immediately, and of course, they extended that too, so. Don't forget the payroll tax credit. I know Janelle's talked about it, but if you hired somebody who's been out of work for 60 days, you can get a credit. What's that? Is there a form for that, Janelle? What is it? W-11?
Yes.
W-11. This is important, Mark. Healthcare credit. Not that anybody's hiring, and if they're hiring, are they paying healthcare? Well, I pay healthcare, and so, you know, and I'm sure some of us do. There's a credit if you have less than 25 people and they average less than $50,000 in pay. There could be a credit up to 35% of what the employer pays in insurance premiums. The requirement is there the employer must pay 50% of the insurance premiums, but there's still a credit. I mean, that's a pretty significant number. I saw a small business lady who said she got a $21,000 credit. And of course, the new proposal by Obama, which is actually a good thing, if you buy a capital expense next year, you can write it off 100%, not having to write it off after 5 or 6 years. So believe it or not, there's a couple good small business things there. Oh, that was fast.
I got a question.